All right, in today's video, we got another update from Jack Mallers and his Jack Mallers show, recently renamed from Money Matters. And I like now that he's got this like actual clip and outtake. I still recommend you watch the entire thing, but this short clip that I'm going to play for you and digest is pretty much the gist of it. And TLDR is that there's a lot of distractions in the news and the media, and the math is the problem, and Bitcoin will continue to swallow everything. So stay tuned.
Watching Bitcoin climb higher feels like watching a train leave without you, but it's not too late. At Drip2 BTC, you can grow your Bitcoin like never before. Earn up to 3,000% APR on credit conversions and discounts on Bitcoin purchases. Step 1, buy Bitcoin. Step 2, deposit it. Step 3, let your wallet do the work. Don't miss this chance to change your life. Start today at drip2btc.com.
Hey guys, welcome back. Drip Coach here with Drip and Farm for poverty, where we don't trust, we verify, and operate with integrity and transparency. So again, this is a clip from Jack Mallers. Every Monday he does a live Q&A style rant from what he calls his closet. This is a closet in his house, empty closet. And in this one, it was about the narrative or information being in the media. So if you were under a rock last week, it was the hot, spicy takes between Trump and Elon's falling out, partnership, arrangement, friendship, whatever you want to call it. And recently, Elon has walked that back. I regret some of my posts about President last week. They went too far. So that is water under the bridge now. We've already moved forward. But this is also related to the fact that Elon stepped down from Doge or finished his term, whatever it was. And also with Scott Bessent saying that they cannot cut enough and they're going to have to grow their way out of the debt. So let's play these clips and then we'll also examine the actual math that Jack is talking about, because the numbers don't lie and you can't, create a false narrative with math.
The math is the problem. Elon versus Trump is a distraction because the math is the problem, and the math doesn't care about your politics. The money's broken. JP Morgan's Jamie Dimon predicts crack in the bond market, citing U.S. fiscal mess. Hold on, what? Let me read that one more time. JP Morgan's Jamie Dimon, the most powerful banker in the history of banking.
Bitcoin itself is a hyped up fraud.
Yeah, that Jamie Dimon predicts, what did he predict? He predicted what? A crack in the bond market, direct quote. You know what, fuck it. I'm going to try my best to actually just break down the literal math as to why both Elon and Trump are wrong. So what is this thing called?
So remember, we've discussed this before, that the bond market is the kind of straw that breaks the camel's back that's holding this Fiat Ponzi together. Remember, the US is giving out its fiat to other countries, and they are were in turn buying bonds. And Jack showed, and I showed previously, I don't have that up right now, I forgot to pull that up, but that basically other countries, let's see if I can pull it up, I'll pause. This isn't the same chart that I had up from Jack, but it's a fairly good indicator. So you see that this one especially came in, and then it in more detail, I think it showed some other entities that are holding treasuries, and like now you have Tether and all the other ones that are up there as well, wrapped into this, and a lot of them are registered in the Caymans. But you can see who's holding our debt, and what Jack is getting at in this, saying that the bond market is cracking, is that there is no longer an incentive to hold debt. Like, the whole reason for holding debt was that you would get a decent yield for buying the US debt. And now, if what he's about to show, the math doesn't math, meaning bond market rates will have negative real yields, meaning you will not actually make any money holding the debt. And that's what Secretary Bessent is saying. Then people will be like, well, why would I hold the debt? Instead, I'm going to invest in the things that are going to outpace the debt. And that's where this math comes in.
Debt to GDP. You take the total debt that we're in and you divide it by the nominal GDP. So debt to GDP, the way to think about debt to GDP is how much debt are we in versus how much growth are we producing to pay back the debt. That's why this metric is important. Let's say our debt is 34 trillion and our nominal GDP is 28.3 trillion. So how much debt are we in versus how big is our economy? And that means our debt to GDP is 120%. To put this in layman's terms, that's like saying I make 100 grand a year, but my credit card bill is $120,000 a year. You owe.
So let's take a look at those numbers that he was referring to. So he's got 34 trillion and 28.3 trillion. And we can actually look here on the website of fred.stlouisfed.org. And they do show a 120% rate. When you divide those two, we're going to get the actual numbers. So we got 36.9 trillion for the U.S. national debt. You know, it's constantly ticking up. So by the time you watch this, it'll be higher than that. And then the nominal GDP, what we're supposed to be earning by the end of the year, projected, should be 30.5 trillion. So I went ahead and threw that into a spreadsheet. You got 36.97 and 30.5. That gives you 121. So pretty close to what's being relayed on Jack podcast and of course Static, because remember, this is continuing to go up. This number is going up, and this is the number they want to focus on to grow and increase so that they can reduce the debt. So it's like they don't want to continue. They're gonna have to borrow and print, of course, but that's what Jamie Dimon is talking about. If they make this number go up higher, then there is no incentive to buy treasury or debt. So it's like, instead, those big bankers and anybody with large amount of capital will be like, well, I'm going to invest in the thing that you're investing in because you are trying to outgrow the debt. So it's like, I'm not going to hold the debt. You already said that the debt is going to have negative real rates. So that's why he's saying there could be a crack in the bond market. Go to the next clip.
Because our economy. And that means our debt to GDP is 120%. To put this in layman's terms, that's like saying I make 100 grand a year, but my percentage of GDP more than you're making. So now, more simple math, deficit percentage of GDP. Currently, the United States of America, we have an annual deficit of $2.1 trillion. Take the GDP number and you get 7.4% roundabouts. Besant's target is 3%.
And I think we will reach that rate.
3% of.
So let's look at the current math on that as well. So we got the deficit as of last year, nominal deficit. So I'm sure that is closer to what Jack was saying, but we're going to use what we can find just so you can show the math. Last year is showing 1.8 trillion. And where is the other one? 1.8 trillion and the nominal GDP rate, right? 30.5 trillion. So we already have that here, 30.5. Scroll over. We got the annual deficit that I pulled off of Google, and that gives us 5.9. So with Jack, if we go up to 2.1, that would be probably closer to 7. Uh-oh, that's horrible. And we don't want that. 21. Yeah, it's close to 7, right? But we're going to use this because that's what's out there on the internet. And that gives us a 5.9%. And like he said, Besant's target is 3%. So there has to be a reduction of $915 billion, or a, the target's going to be $915 billion. And the reduction that they have to cut out is $884 billion, or we'll just call it a 50% reduction, basically. Like, simple math is 5.9. He wants to get to 3. That we'll round it to 6, get to 3, it's 50% reduction, right? So again, it's just math. You have to cut half of your deficit, what you're expending each year. So back to Jack's original analogy of you make 100K, but you're spending 120. Well, you need to cut that 120 down to 60. And like, how realistic is that for any actual person? If you are and have been spending above your means, and we can even look at that historically. There's a chart. I think it's this one. Yeah. So this shows the GDP. So like basically since 2015, we've been over our GDP. Like, we've spent more than we've earned, and we spiked up during COVID, of course, and now it's come back down. But so if you take someone that has been for 10 years spending more than they earn and say, hey, we need you to cut 50% of your expenses in 1 year or 3. How realistic is that? That's why Jack's saying the math just doesn't math. It's like impossible.
Of $28.3 trillion. So he wants our deficit to be $850 billion. So just try and rack this through your brain. He needs to cut over $1.2 trillion to pull that off. That is a 40, he needs to cut our deficit in half. Okay, Besant in the US has given up on the fact that they can cut their way out of this. This was so Doge March 2025. Bro, what? It's June 2025. What you're talking about is so March that we were gonna cut our way out of this. It doesn't make any sense. You literally can't. If you were to cut, you take 25% of our biggest bills as the US government and just slash them, you're going to destroy the highly levered economy that you've created. So Besant is saying, let's get our GDP growing faster than the debt. Then we can grow our way out of this.
Reference what Jack just mentioned. Here's usspending.gov, kind of an overview of where we're at. So it's like, yeah, where are you going to get that reduction in expenses? Now, this is showing the complete budget for so far, what's been spent up to this point. And I think by the end of the year, it's going to be 12 to 15 or something crazy like that. So it doesn't give you the 1.8 to 2.1 trillion deficit that we're creating. But basically, when you add all that up at the end of the year of what we bring in and what we're expending, you'll come up with that dispergence between the two. But this shows you where the money's going, supposedly. So ask yourself, where do we cut? When the interest alone is 11%, we'll call it 12. And health is 13, so that's 25. Plus another 23 between here, that's 48. Plus 14 is 62% in just these 5 core areas. So you already have 62% of this stuff. And obviously, if you start cutting any of this, you're going to piss off whatever group of people this is. So you're not going to get reelected, and no party, left or right, will cut any of these things. And even these, like veterans benefits, I get that. I'm not gonna be happy about that. It's already pennies on the dollar anyway. Income security. So there's hardly any wiggle room. Like, already identified 62%, so there's only 38 left to choose from, and we need 49 or 50. So there's nothing to cut. And that's what Jack's talking about. He's like, cut what, bro? Like, Elon cutting was so, March 2025. And I gotta admit, I was on Team Elon. It sounded like a great idea, and it seemed like it would work. And I thought there was a lot of excess waste and stuff that we could find. But we're just a horribly run business, so to speak, that is just not profitable, and it's ran solely on debt. So the only way to get rid of that is to debase the actual amount or the dollar value. So how do you get rid of the debt? So like, if you were, and I think Jack used this analogy, if you were to have to pay back the debt on your own, a normal person has a few options. So I owe you $20. I can A, pay you back $20. I can B, default and say, sorry, bro, ruined our relationship, I'm not going to pay you back $20. Or if I'm the government, I can say C, it's like, well, I can't default and I can't pay you back, but what I can do is make the dollar worth less and less, so that the debt slowly gets eroded, basically. So like, I can debase the value unit that you are collecting the debt in. And that's the option they have chosen.
But Jamie Dimon is saying, if you have growth faster than the debt, then why the hell would I own bonds? Why own bonds? It's a trick question. Nobody is owning these things. This is the worst bond bear market in the history of bonds. Everyone's dumping these pieces of shit. I'm getting myself worked up. You can't cut your way out of it. You can't. There's no such thing as growing your way out of it. That's a debt to GDP of 120%. That doesn't make any sense. It's mathematically impossible. So the math is, you have to debase and inflate your way out, or the whole thing collapses. That's the math. So ask me again whose side I'm on. Bitcoin is the side I'm on. That's whose side I'm on.
And I hope after that and all of the videos I've made, you guys are on Bitcoin's side as well. Yeah, this is definitely not political. It's not Left versus right, nothing matters besides the math and the fiat slavery Ponzi trap that we're in and getting unplugged from that. And the only solution out of that, no matter where you live, because every country is doing the same thing, some more transparent than others, some faster, some slower. But the only life raft out of this tsunami tidal wave coming of debt debate, your economic value being debased and debt inflating is Bitcoin. That's it, because it is the only thing that was created outside of this system. So hopefully, again, all of these videos, this content, everything, putting a video out every single day, showing you guys my journey of how I got orange pilled and coming to this rationale. Hopefully you're waking up as well. And like, again, the math, just, you can't make this up. You can't change it. It's just math. There is nothing else you can do to remove this. And then again, at the fact that what we're seeing with, where did that chart go? That 11% on interest coming up due every year, like that's just going to continue to grow. So at some stage, there is nothing you can do. And I believe that's when they'll usher in, CBDCs or something else, or a pandemic to wipe the slate clean. So I don't know when that is coming, but when you start to look at the math and see that that's the natural path that this is going to take, like it's either that or hyperinflation like other countries, and then you create a new currency, right? But when you're the global world reserve currency, you can't let hyperinflation happen. So they'll have to stave that off before that happens. And of course, one way out is, gold and Bitcoin. And that can definitely work, but it has to be done sooner rather than later. So either way, as long as you're holding Bitcoin, you will be safe. For those of you that are still chasing shit coins and, hoping to gamble your way to wealth, I will keep you in my prayers. Hope for the best. All right, that's all I got. Smash that HBO special, help a brother out. Like, subscribe, comment down below. And until next time, live daily and achieve your impossible. See ya.